Hey, what's up, everybody? It's Wednesday, July 29th, Fed Day today. Gold makes a new record high, dollar going down. We're going to talk about all those things. Gold, man, this rally, I'm telling you, it's still got a ways to go. There's going to be corrections along the way, but this is for real. This is for real. And the dollar, as I've been saying for a long time, as you know, if you've been following me for any length of time, the underlying fundamentals for the dollar are bearish. Big fiscal deficits, big trade deficits. There's going to be counter trend rallies. We just had one of a pretty long duration over the last 2 years, but as I was saying, all through that dollar rally, eventually it will give up those gains. All right, let's talk about the Fed. We had your typical knee-jerk reaction to the Fed. Everybody bought the stock market. The Fed cannot help the stock market. Sorry, I'm just going to say that flat out. I've said it before. The only thing the Fed can do is set prices through its interest rate setting function. It can change the composition of assets in the economy, all right, but that does not change the wealth of the economy. Or it could shift between the two main cohorts, debtors and creditors, all right? When it cuts interest rates, that favors the debtors, but it takes away from the creditors. When it raises interest rates, that hurts the debtors, it favors the creditors. All it does is shift around that wealth between those two cohorts. There is no net addition by the Fed to anyone's pocket in the aggregate. All right, it might help one group and take away from another, or it might help that other group and take away from the other group, or it just changes the composition of assets. Now, the fiscal authority, right, which is the government, can increase your wealth. And the problem here is they're about to take it away. No, let me take that back. They've already taken a big chunk away. I talked about this yesterday. The deficit in the last 2 weeks has dropped by 155 billion, which equated to the exact same drop in personal savings. The only way the government can save or reduce its deficit is by taking it away from us. And now we're going to have that $600 a week payment go away. Congress hasn't done anything on this. So, you know, today's rally, I mean, it's understandable if you understand market psychology and the behavior of the crowd, the behavior of the zombies. I mean, they truly believe deeply that whatever the Fed does is going to be good for the market or bad for the market. It has no bearing whatsoever for reasons I just discussed. The problem, as I said, fiscal cliff. We're taking away a good chunk of the fiscal support. Come Friday, it is over. And I don't see any, bills on the horizon. The Senate is split even between the Republicans in the Senate. And even if the Republicans got together on a deal, they're so far apart with the House. I just don't see it happening. Plus, these guys are going to go on vacation in another couple of weeks. And then what? And you got evictions coming, and mortgage payments due. So all that stuff lining up. But stock market rally today is totally understandable, but it is wrong. As in the past, you want to sell into these things. Because, I don't know how many times I have to repeat this concept. You go against ignorance. You go opposite to ignorance. You go opposite to emotional behavior. All the time. Doesn't matter whether you understand economics or what's happening in the economy. That alone, going against lack of knowledge, going against ignorance, going against emotional people, that works. It might not work in the instant, but it works. So keep that in mind. Checking out today with the tax flows Still not seeing any improvement in the employment and withholding tax flows. They're just, they keep going down. As I said last week, don't be surprised if we see an increase, a turnaround, an increase in weekly unemployment claims. We got that. It was 109,000 up last week. Don't be surprised tomorrow if we see another increase in weekly unemployment claims. Here's something else. Average daily unemployment benefits are starting to rise again. All right, they were falling in June until the week ending July 17th. Then the week from July 17th to July 24th, they started rising, and then from July 24th on, and they picked up so far in the data this week by a significant amount. Okay, I only have 2 days of data, but the increase was about a 24% increase over last week. So again, if we see another increase in unemployment claims tomorrow, don't be surprised. I'm telling you this right now. And remember what happened last Friday or last Thursday when we saw that big increase in unemployment claims. I mean, the market went down. One more thing. Tomorrow we get the advanced number for second quarter GDP. This could be something that breaks the record books. They're looking for a 34% decline in gross domestic product, a 34% contraction in GDP. So I guess if it's 33 or 32, the market might actually be happy with that. But if it's more, watch out. But gold's still looking good. Dollar trend is down. That has resumed. We had the EIA report that came out today. Actually, looking pretty good. We saw an increase in demand in gasoline, an increase in demand in distillate fuel. No increase in jet fuel. That was actually down. We saw refiner inputs were up. Crude exports were up. But a big drop in refined product exports. I don't know what that was all about. Maybe it had something to do with that hurricane down in Texas or that tropical storm last week. Possibly, I don't know. That might have interrupted some of that flow, some of that ocean traffic. Anyway, that's it. Oh, listen, I just put up the new episode of my podcast. You can click on the link right here in the description below. And of course, don't forget to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. You could also watch the podcast over there. If you go to my website, you'll see a little tab that says podcast. You click on that, it has all my podcasts on there. Remember, I'm the only guy who has an applied approach to MMT. There's a lot of MMT academics out there. They like talking a lot. You know, I come from a background of trading, a member of 4 exchanges, a floor trader, been doing this a long time. I take the MMT concepts and I apply them to trading and investing. Nobody else does that. So go to my website. See everybody tomorrow. Bye-bye.